Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab community? Well, good morning, everybody. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for stopping by today. Today's April 17th, 2025, and this stream is a continuation of yesterday's stream from 4/16/2025. And yesterday's stream is a important piece for you to watch. It actually, we always are building on top of the previous behavior, and it sets up today's trade. So if you put today's stream together with yesterday's stream, and if you're in YouTube, I've posted the link up there. Be sure to save the link because it might not be accessible after the end of the stream. And then watch them together this weekend. Also, as another note, there will be no streaming tomorrow. The market is closed for Good Friday holiday. So for those of you who celebrate Easter or I think Passover, I'm not sure on the dates there, I wish you all the best. And thanks for visiting the Trader Lab today. Let's get going. We have a lot to go over. As like always, this stream's about integrating Bookmap order flow tools with auction market theory, using a volume profile as a chassis in the intraday developing time frame. The Trader Lab is a community of like-minded traders who've come together to leverage their collective experience. It is available to everyone, and there is no cost. There's a link in the bottom of YouTube, and you might kind of consider Trader Lab a place where developing traders of all levels and experience come together in order to understand the business they're attempting to be in, how to construct a business plan or trade plan to operate in an environment that is 100% random 100% of the time. If we can accept that we are in a gaming business, or we need to use a process that's aligned with the business, and I'm going to suggest, and it's just a belief I have from my experience, and it might not be yours, is that we can't predict or create confirmation. We're driven psychologically to look to avoid risk, of course, and because we're risk adverse, we try to deploy processes that give us confidence, certainty, and the terminology is, I'm looking for more certainty, I'm looking for confirmation. That is not what exists in our business. What exists in our business is randomness. So how do we solve? How about we solve for randomness and not certainty? Whoops, let me get back here. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Grab a pen and paper. I'm going to throw a few statistics at you, and then we're going to get into today's trade, and it's based on structured trades. These are available to all of you in the Bookmap Discord Trader Lab community. And again, there's a link in the bottom of YouTube if you're inclined. And these are broad strokes. I did these many years ago. I'm not a vendor. There's no cost for this. But the idea was I was getting a lot of requests from other traders, kind of like, what are you doing? So I thought, well, this is broad strokes. Now, by broad strokes, it's you can look at these, and then in the Trader Lab, if you come to Trader Lab, there's a library of webinars. So you can see these processes broken down into, call it components or elements. And then the idea is you select a couple of these, and then you reverse engineer them and find out if you can build out a statistical edge. The business of trading is not a predictive business. In spite of what we might want, remember what you want and what the business is are vastly different. And what we want to talk about is what we might be able to achieve, and that is understanding that we're in a gaming business. We are not in a predictive business. And it's very different than what most of us think when we come into the business. Now, uh, there is a link again. I posted in YouTube. Grab that link. It's up near the top. It's yesterday's stream, and it's a foundation for today. This is what I showed yesterday coming in. I want to remind you of the higher time frame. This is a consolidation. This is called volume profile or auction market theory. And it's simple. If you understand when you go how to shop, you understand maybe the basis of trading, because the function of even having a market is determine what's too high, what's too low, what's the retail price. And if we shop somewhere as traders and we find a price that's too high, and we also find a price that's too low, and we find a price, the orange line, that is the high volume or retail price. Remember, you go to the store, retail is high volume. Buyers and sellers agree it's a fair price, and that's where most of the business is done. If the price goes on sale and it's too low, the sellers will not keep the price on sale indefinitely. You go to the store, you throw 4 in the cart instead of 1, and then it comes back to retail, and you're still willing to pay retail, but you like it when it's on sale. If the price gets too high, the buyers are going to go, nah, I'm not paying that. And then the price tends to come back to retail. I hope that makes sense. Now let's take this another place. If we break out of a consolidation, what does it say? Remember, language. This is language. No indicators. Language for me. You can use indicators. If that's too high, and then previously out here there was a consolidation many months ago, and this is the retail price. This is why this is too low. Oh, it's on sale. Too low. Too high. Retail. Gap out of the consolidation, and what becomes too high? This price. Too high. Under here, I'm not paying that. Valuation has changed. Down we go, down we go. New valuation, too low. Now this is our, tariff 70, what was it, 30-day or 90-day hold, 90-day hold. So where do we go on the explosive short squeeze? Back here. There's the high. Why do we stop there? Well, first of all, it's random, so let's forget about prediction, but it's too high. See you later. Thanks for playing. We'll send you a gift basket. Now what? This becomes the retail price in all this volume. Where's our stops? There, there, there. And here, this day, we are looking for, and that I was looking on longs to take out that high and get up back and test this level and squeeze the shorts out here. That was my plan. And what happened? Not so much. In fact, we came back to this support. Is everybody tracking? 54.28. And it's very important you understand what creates behavior. This is yesterday. What was our high volume? Whoop, lost my place here. 54.28 is the retail price in this day. We failed to get back there and take the stops out here and here. We closed on the low, and this yellow line is called developing volume or point of control. In other words, the highest volume. If I go down in time frames, this is an intermediate time frame, and this is the retail price in here, looking for it to go up. It fails. The new retail price is here in the RTH. The higher time frame price is now here. I open below it. I test it. Now, what's the opposite of this is too high? If I get below this, this is too high. Shorts. Where's my stops? Under here. What's our possibilities for today? We have broken away, and in my opinion, not a recommendation, we're going here for a test, possibly today, yesterday's low, and then we'll see. We're going into a holiday weekend, so potential for short squeeze anytime, any place. And eventually, potentially, under here, back to the retail price here, not a recommendation. This is the lay of the land. Now, let's go one more piece. This is yesterday's RTH. This is important. Let me explain what you're looking at. Remember, the retail price, 53.92. Where's yesterday's high? In fact, we had a short up here. I narrated it in the stream, and it was at 10:30 Central Time-ish, 10:25, and I lamented that I had a structured trade here and I couldn't take it. Such is life, because I was about to stream. Too high. Test. Short. To where? All the way down here, but that's besides the point. So this right here is what's called a high volume node. And what it means is, and this is now yesterday, when we find too high, we can rotate. Buyers are here, sellers are there. The high volume is right there. If I leave it and rip, then what that means is this is not auctioned. It's like, I'm out of here. I'll send you a postcard from the edge. And then we start another rotation. And this rotation is an auction. I'm not paying that. Yeah, but it's on sale. Retail. I'm not paying that. Yeah, but it's on sale. Retail. If this becomes too expensive, we all get in the car and we drive to the next store. And now we too high, too low, retail. If this gets too expensive, then we come down and we check for too low, wherever that is. And where's our stops? Under this low, which we picked by 2 ticks, and then we had our short covering. So here's what this sets up. Then we'll get into today. This is called a single. And all it is, it's from market profile days. Back in the Stone Age, before we had volume, which is what this is, this gray, we had something called a TPO. They are 30-minute brackets, but they're really like 30-minute bars, except if we rip away and we don't come back and close it, that suggests urgency, and it wasn't auctioned. It's like a breakout. So the possibility is today to come back in here and fill it in. And that's called a single. It's located right there. Also, the ETH volume point of control is the retail price from the last auction. Okay? Also, as we keep going, so this is retail. This is the single. So the idea is that maybe come in here, and nobody can predict, part of the thrill. And then ETH high, there's over a 90% probability we take out either the ETH high or low. There's over a 90% probability we'll take out either the first hour's high or low. There's about an 80%-ish probability that we'll get here. So in my plan, not a recommendation, before the market opens, based on everything I've showed you and the ETH, I have the following. Short that. Short this. Or if I sell this, I'm coming back here. And this is the micro composite. 99 or 5,300 is now the retail price in intermediate time frame. I have not had a long today. I am only trading with the trend. Is everybody following? This is before the market opens. This is called a trade plan. Are you guys following? Are you guys with me? Okay, thank you. All right. Now, guys, please give a like if you're in YouTube. And remember, the Trader Lab is available to all of you. And you have to, when you come to Trader Lab, it's a community. There's no plug and play in trading. Trading, in my opinion, is not an indicator business. It is a behavioral business. So what we need to be able to do is read the language of the market. And indicators have a place, but let's consider what indicators are. And most retail traders think it's indicators and time frames. I'm going to suggest that's not the business. The output of the behavior creates price-based derivative indicators, gives you your output, like Google Translate. But does it make sense if we think indicators are the output, that's the same as the tail of the dog? Is the tail of the dog wagging the dog, or does the dog wag the tail? If you understand the dog or the market, then you might understand what an indicator is, quote, indicating, and when it applies and when it doesn't. Remember, our trade for the day is selling counter rotations, and we have specific trade plans for that. One is called mean reversion. In fact, we have a trader in Trader Lab named Tapish, who actually mentioned that he really is enjoying mean reversion. I'm going to show you something called fractals. Fractals are microstructures in developing time frame. You guys use time, most of you, many of you. I don't use time, and I use what's called fractals, and they're based on order flow. A fractal is how long does it take for this interaction between buyers and sellers before I can read it, and it tells me that there's an auction going on, and in this auction, just as an example, that the sellers are in control here and the sellers are in control here. So let's watch. Overnight volume point of control is here. That's where that is. That's the retail price. The single, which is where I'm looking for it to potentially test and is an area for a short, is up here. So short from here and shorts anywhere, and I have about a 70%, well, not quite. I have a high probability of here, and ETH low and out the bottom, coming to settle, all that jazz. So anyway, all this is in the statistics. They're available in TraderLab. Now let me show you the first trades. Now, there's a couple different ways to handle this. There's 3 configurations, primary trade plan elements that I suggest you understand and learn. The first one is, what is the higher time frame context? I went over that. South. What can we anticipate? On the open, 2 things. Responsive buying. In other words, we open higher, we're above the settlement, we're above the retail price from yesterday. That suggests if I open higher, the possibility for short covering, because the current shorts in the market want to take money off the table before tomorrow where the market's closed, so short covering. I anticipate that. The other piece is those who are still under the bus, who are long, might sell to get out, and more shorts will come in, and then they can get squeezed. And if they get squeezed, I'm going to look to fade it to get back in alignment with the trend. So there's 3 elements. One is condition of the market, sellers. Dominant side, sellers. Weak side, sellers from this location. So if I get early sellers, buy stops are going to be above here. They can get squeezed. So the late sellers get squeezed, and the current shorts in the market cover. That creates your buying. Then if I exhaust out, because it's not strong initiative buyers, it is weak buyers buy stops, not initiators, and it's a mix of both all the time, subject to time frame. Then I'm going to fade it somewhere, and I have my levels, and I'm going to look at order flow for what's called mean reversion. Tapish, mean reversion. So I'm going to show you opening trades, and I'm going to tell you, subject to your trade plan, and there's 3 conditions again, remember. Directional, integrated with the higher time frame. Rotational, which is mean reversion, and the open. The open's a separate trade plan. So I always say in TraderLab, if you're a developing trader, you study this, you don't trade it, because this requires a higher level of skill. And because of speed, you got to really have your stuff together and know what you're going to do. And it's all plan-based. It's not a video game. We're not playing a video game. We are gaming. But gaming is only interacting when you have a statistical edge, not when you push the button because you want a thrill. Um, and the thing is, most retail traders confuse what the business is that they're trying to be in. It's not impulse. And you also have to understand that you're under the influence of chemicals in your brain, fight and flight, FOMO, all this, fear. It's all part of our humanity. How do you deal with that? In my opinion, you deal with it by having a plan so you're not making emotional decisions. You're following a vetted process that has a statistical edge. If you're not doing that and you're just waiting to kind of see what you want to see and you can't measure it, then you're just gambling. And I always say go to casino, get the cocktails, and then be sure to get the ticket to the buffet. Because that, in my opinion is based on going on 46 years of trading, both professionally and here with you, is not sustainable. But it'll be enjoyable, other than the emotional wear and tear and the attempt to try to make it better by curve fitting indicators, which is what most retail traders do. And you'll know, because of the failure rate for retail traders, why is that happening? I hope you reflect on that, because if you're having a hard time, even though you have winners, which anybody can have, it might be because you have no edge. Gamblers win, remember that. They don't have an edge, though, but they still win. But the casinos extract the dollars from the gamblers. So anyway, that's my little thing. So, and if you're new to Trader Lab, if this resonates with you, use the link in the bottom of YouTube. It's a great community. It's not romper room. It's for serious traders. And if you're not willing to go to work, roll up your sleeves, take your experience and learn from it, then like anything in life, you're going to it's Trader Groundhog Day. You're going to keep waking up in the same place. So, too high, overnight VPOC, wherever it is. I think it's covered up. So this is the RTH open. So let's look. Now, I don't take these trades unless it's sort of a gift. So I don't take these. I navigate, I read here, and I can see I have sellers here. My sellers take control here. Now, my liquidity is in the book here. Now, this is not my trade. Okay? It's other traders' trade. What happens here? I get a sell sweep into my liquidity. Two possibilities. Keep going, break high. If I break high, this trade now, if I was short, would be over. Some traders are going to take the retracement here to the mid and the VWAP to here. This would be the trade. So it's not undoable. You might say it's almost 10 points. Again, for me, I just sit back and wait. Because let's go back to why. Sure, the trend is down. Sure, there's shorts in the market. And what do I have here? New sellers. Where's their stops going to be? Opening swing high. Let's make a little note. Why? Because there's certain behaviors. How about this? Write this down. Think like a retail trader. Don't act like one. So, opening swing high. What's at the opening swing high? Stops. If you were short from higher up, you might put your stop here. If you sold in this leg, your stop would go here. If I want to get short, do I want to be with these guys that have their stops here? And I know I have buyers here, the limit order book. I get absorption down here, a stop sweep, buying icebergs, sell stops coming out. Thanks for playing. Don't ask me who's long. I always wonder. Now let's just see what happens. So I have a couple places for potential trades. There's the mid and the VWAP, not my trade. There's back here, not my trade. There's up here, my trade. Squeeze. Let's see what happens. Support? No clue. Watch. VPOC migration. Now I did a webinar on this. I'm going to do what I typically do. You'll notice every day in the stream, I follow process. Why do I do that? Because it's the only thing I have that's anchored. And if you watch the primer webinar, and it's available to all of you in the Trader Lab, I talk about anchored inputs. And the comparison is how casinos operate. And I'm labeling the migration of the highest volume in the developing time frame, as you think of it. And they're fractals. And remember what I showed you about distributions and rotations at the top of the stream. And if you missed the top of the stream, you should review this. This is an auction. Too high, too low, retail. If it's too expensive, I'm not paying that. And we leave. And we go to a new store and we start a new auction. Too high, this is now resistance. Too low, retail. There it is. If it's too expensive, I leave the store. See, I'm not paying that. Get out of here. I leave the store. I come back above here. That's a warning moment. And this is the new retail price. I have left the store. I have left the store. High volume is there. This is a store. I'm a shopper. High volume is here. I'm going to label it. Follow the yellow brick road. Stay with me. Use an interpretive language. This is the market, the language of the market. I don't use indicators. I do is I had to teach myself to read this so I understand what it says. What is more timely, waiting for an indicator to cross or understanding what's happening right here? And when I come from here to here, and I know I had a sweep, my buyers were here, the limit order book, my icebergs are here. This is how order flow helps you. And I see my buyers come back in and I test this. It sets up the rotation there. I get VPOC migration. Too high, back here, too high. Where's my support? It's here. What happens here? And I'm just giving you some sense of reading, not trading. Your trades are where you vet them. So all these could be shorts, and they're not for me because of that. So I'm just hanging out here, and the lunatic under the hood says, you should have sold it. You ever have that conversation with yourself? I've learned to ignore it because in hindsight, the lunatic under the hood, which is the primal wiring, who approves and disapproves of you, the self-talk, is always going to tell you what you should have done. And if you take a stop, it's going to say you shouldn't have taken that trade too. So what do you do about that? How about you tune it out because you understand this voice in your head is clueless. So let's look at the language. What happens here? Absorption and buyers. Now, for me, there's no longs. Why? I want to get short. So you're saying is, well, Tom, why didn't you get short here? Because that's what I anticipate. This is now the retail price. Look at the change. And you guys ought to be reviewing these streams and be sure to review the one I posted in YouTube. And if you guys are in Trader Lab, you need to put these two together because they basically fit inside each other. So too low, no clue. Come above here, which was support, becomes resistance, support, resistance, retail price, needed to do this. Target is here. Target is settlement. Too low, break high, VPOC migration. Needed to reject this. What happens? Too low, break high. Hasta la vista, now the squeeze is on. Watch. So where's my resistance? There, variable high volume node, and the stops are here. If I take a short here, it's a very aggressive trade because I know my stops are here. My liquidity comes back in the book, and let's watch the behavior here, here, and out here. Let's watch. Right here, liquidity is in the book. Liquidity is in the book. Opening swing is here. If I take a short here, it's extremely aggressive. And I'm not going to comment on what I would do. I'm going to say you have to know, is this your trade? Why might it be a trade? In this Tapish, referring back to you, Is Tapish in the Discord, by the way? How we doing in YouTube? Let's look at the location. Where's this opening swing high? It's right there. Where do I come? Back to the opening swing. What do I know? Now, this is where trade plan comes in. I know this is too high. Let's look at the location. And I know I got stops here. This is an extremely aggressive trade, but it is qualified if it's in your plan and you can trade it with edge. Let me show it to you. Now, you guys know about real estate. Location, risk, liquidity in the book, buyers, and this doesn't have to be your trade, absorption, selling icebergs, liquidity here, liquidity comes in here, going to the moon, look down here. This is just showing you the delta. Where's my sellers? You don't see them, do you? Where's my sellers? Where'd they go? There's my buyers going higher. What happens here? Sellers take over. And I can see it in two places. Now I'm going to open this up, show you how you might use an order flow tool. Again, location, risk. This is a aggressive trade. It might not be a trade anybody ought to take. I want to show you pieces. Now, what I do and what you do, everybody finds their groove. I'm going to draw a couple lines on here for you. First of all, now I'm in micro. I'm going down, and as you guys think of time frames, what I'm actually doing is trading in fractals because the clock does not regulate this. This is regulated by the participants, and let's call it what it is, order flow. Right here, just follow that little node sticking out. This is your, I'm not paying that. Yeah, but it's on sale. Oh, come on. Yeah, you see, the auction. And inside this auction, again, I'm going to help you guys see the result of order flow. And that's price action. So if you're developing, you may not be, even if you have Bookmap, you've got to learn to interpret it. While you're deciphering all of these tools, you can also use price action as the output of order flow. So what happened here? Let's come now, getting down with the electron microscope. The buyers are here. They were absorbed. The seller, see? The sellers are up here. The liquidity is in the book, and I'm as clueless as everybody else. Why? I am. What do I know? Too high in the next higher fractal. We were up here, we rejected it. Remember? I'm not paying that. Well, if I come back to the store and the price is too high, and then in the fractal going down in time frame as you think of it, and it's still too high, and I get my sellers, how do I enter this trade? Here. This is a structured trade. You can learn this. You have to vet it for yourself. Everything you hear in this stream or for any other educator, you have to see if it works for you. And everything is random. We all take stops. The casinos pay the gamblers. It's called cost of production and overhead. You got to get over it. If you're not willing to pay the gamblers, close the casino. It's not about winning or losing. If you have an edge, the dollars will flow to your side of the table, just like it does in the casinos. If you're gambling, maybe you're sitting on the wrong side of the table. This is a very high risk trade. The entry is here, stop would be above here, and you're going for this. So this is the range. So it's tight. So you have to, the entry would be one tick under here, a limit order. And because we're fearful, if this is you, think about it. We are fearful. We are risk adverse. We don't do what's in our best interest. We are always looking for confirmation. Does that mean you enter here by the time you get in and your risk is out to here? Or is it better to enter here without confirmation with less risk? What do you pay for the price of confirmation? Does that make sense? Is there news coming out here, guys? Volatility has really picked up. This is a short, back to here, and then you're looking to come out the bottom. And again, where's the stops? Up here. So you'd be risk neutral, and now you're holding. Let's see what it does. Notice what's over here. Variable high volume node, liquidity jumps in. What does that suggest? Possibly this is going to be an area to scale, and then we got to see if we come out here, and nobody knows. Let's watch. This is another target. This is a structured trade. Outside in to the last place, too low. And then, and the liquidity here. This now becomes your resistance, and then you're looking for that next target. Or short, scale, done. Doesn't matter. What's your trade? See? You cross above here, time to get out of Dodge if you're holding for this. If you're running a 2-lot, which is a minimum configuration, it's there to there to there. Is everybody with me? Ah, POTUS. Yes, yes, yes. Let's watch. Remember where the stops are. Opening swing high. Let's come back to the language of the market. Too low? No clue. Now I'm going to take you into something advanced again. I hope this is okay for you guys. You know, I can move on to real time. I don't care. It doesn't matter to me. But the purpose of the stream is to educate you, to show you something that you might not understand. I'm going to take you down again in time frame. What happened here? These guys, these sellers, were absorbed. And you don't know that until the buyers take over here, okay? We come back to this structure, and what this is high volume. In a micro structure or fractal, let me draw it for you. I'm going to show you again something you're seeing constantly. It's actually right there. So this is the high volume. This is a mini auction. It's a fractal. It's on sale. It's too low retail. What do? It's on sale. There's the sellers, buyers. Sellers, buyers. Auction. If I break high, it means now the buyers have taken control. Where's my support? And it can do anything. It's here and here. Now, I don't take longs. Why? I want to take shorts. Just me. My plan. Doesn't matter. This sets up a better get out of Dodge. This is your support. If you're a counter trend trader, you're leaning against this. And again, for me, I got a target down here in settlement. Why would I get long? Not saying you can't. Why would I? And this now is my variable high volume node, you see? So I already know where my buyers were active. So when I come down, where do I come? Notice? Can you read this? This is auction market theory. What am I doing? I'm shopping. What is this? It's a store. Price is too high here, sellers. Price is too low here, buyers. One of these guys, one side is going to win. It's like a shootout. When the buyers take over, then all the shorts who are in this leg are now on the chopping block to get squeezed. I break high, which is a problem right here because we went above the retail price, and I come back and check it. It's now too low. So sequentially, too low, buyers, check here, too low. If I would have bounced off here, look at this. I come here, auction. Too high. Where do I come back? Too low. Where do I go? I break now this level, and what is it now? Too low. So too low, too high, too low, break high, too low, north. Can you see it? And then when I get my short, where am I coming back? Here and here. If I don't get below the buyers that were absorbing these sellers and who took control here, here's the logic. Is it logical that if I have buyers here and they think it's a heck of a deal, the shoppers, that if we come back, will those buyers show up again? Logic, common sense, auction market theory. It's the shopping experience. Let's see some more of this. Anyway, let's watch. Now, where's my locations? Opening swing high, gotcha now. Now, what do I want to do? Outside in trading, mean reversion, underlining the term mean. Let's watch. I'm looking for this high probability to get into that zone that I showed you at the top of the stream. Again, if you missed the top of the stream, you need to be looking at the beginning of it and also look at yesterday. Now, using order flow, no clue, clueless like everybody else. Don't think I'm not. I want to differentiate. Clueless means open to everything, so it's always maybe, but not ignorant. Only looking for locations. Now let's try to see where the next trade might be. What do I know? Opening swing high. What do I know? This was too high. What do I know? Retail now is here. And what else do I know? I want to get short somewhere. Part of the joy. Coming up, I now have order flow tools. Sweep, sweep, and I'm looking for this. This is a structured trade to get out here. The thing about this is there's no precision, part of the thrill. So since I'm in the world of maybe, what do I see in the order flow? Liquidity, liquidity, sweep. Sweep suggests counter rotation. Where's my retail price? Well, my microstructure is there. Isn't that the opposite? What was at the low? Now, you can go back and look at the stream. So now I put a little line in here because now I have microstructure. 595 buy stops. Thanks for playing. Everybody gets a ticket to the buffet. Now, microstructure. Let's look at the structure. Now, the structure is bracketed here. I'm not paying that. Yeah, but it's on sale. It's right there. When I break below that, it is a trigger. And look at the behavior. Now, the trigger does not happen until you're below the low volume node. This is called the low volume node, and that's a low up high of the day is also low volume, exhaustion. The retail price is this little node sticking out. So this is a store. I always think of these. Remember, if you think shopping, you understand trading. It's where does it happen? And we're going to get fooled. Right here, you have the sweep, the liquidity, and a trigger. If you sold it here at the high volume, you would take a stop. Unless you're out here. And let's assume you're not. Or you're not going to do anything until you get to location. All of this is part of your plan. So depending on your skill level, you might sell this. You might sell that and take a stop. You might sell this again and either take a stop or it's a better location and you're coming here. It's called mean reversion, underlining the term mean. Let's look at the trade. Location is not here. It's order flow. This is advanced methodology. Microstructure. This is Saturday night, pint of ice cream, the little store down the street. They charge ridiculous prices, but it's called a convenience store. You pay for the convenience. It's a store. If the price is too high, some people will pay $8 a pint for ice cream before the movie Saturday night on the sofa, but not many. The retail price is here. If I leave the store, but I like the convenience, I can come back and check the price. The same thing I'm doing here, higher time frame, if you will, or fractal. There's my test. There's my outside edge. There's my micro retail price, too high. Where am I trying to go? Here. Right here. That's my scale. Okay? 2 ticks ahead. And it's also the mid and the VWAP. So you got to scale ahead of this. Then where's my resistance? It's here. Where the sellers took control, right there. I'm going to move this out just so you can see it. This is for you guys who are developing an understanding of how to read order flow. And it's, Bookmap or any high tier tool is not plug and play. A green bubble doesn't mean get long. It's delta. You need to understand the tools. And the education that Bookmap offers on order flow and a lot of other elements is second to none. You can learn it. But if you don't put in the time, you're not going to learn. There's no plug and play. What happens here? This is my retail price. What do I have here? A sweep. What did I have here? A sweep. Where's my liquidity? Here. What is coming back in the book? My liquidity. There. This is now order flow. This is the retail price. This is too high from the shopping experience. The shoppers come back to the store. I'm not paying that. And where are we trying to go? Here. Variable high volume node. So if you took it here, you got to scale ahead of this. You'd be scaled. You take it here, you got to scale ahead of this. You'd be scaled. And then where's your support? Here. And where's your targeting? Lower. Let's see what it does. Where's your resistance? Here. Can you see something? Is this making sense? Yeah, Jim, you use more limit orders. Yeah, you know what's interesting? Confirmation. We pay for confirmation with wider stops. We will take stops whether we have confirmation or no confirmation. So if we can accept the outcome of any trade is always random, think about it. Am I better off taking a stop without confirmation because it's less versus a stop with confirmation that has more risk? Over time, what gets me the better result? Interesting, isn't it, Jim? The answer lies in the statistics. How we doing, guys? You follow it. So, short. And I was speaking to one of our traders this morning, and we were talking about these trades. I like speaking to you guys. It's one of the things I think I enjoy because trading is very isolated. Remember, this is too low, and this is too low. So if I'm taking shorts here, this is called mean reversion. And let's watch. If this is support, variable high volume node, and my liquidity shows up right here, it's a scale or a target. You could be taking this to this to this, your trade's done. Or you could be taking this to this, you could be taking that to that, and your stop stays here because you're going for statistically valid targets. And this is the big kahuna down here. It's the highest volume in an intermediate time frame, but neither here nor there. And that's your trade. There's nothing more to do here. If we take this out, which is support, because my buyers are here, then the possibility is to keep going south, and I have statistics. Let's see what it does. Statistics, over 90% probability we get to the ETH high or low. I don't know about you, but I suspect it's this one. What do you think? Target, and there's more. Now, nobody knows, by the way, where anything is here. I typically trade the targets because I'm not smart enough to predict anything. So I just put my targets out and I trade statistics. Other traders will use a trailing stop and if you have runners, and this is all a function of numbers of contracts and vetting. If you have runners, you have to vet trade management and see over time, not outliers or one trade, over time, what gives you your edge and your yield. So we're not trying to curve fit and find the ultimate, which is what we tend to do, by the way. How would I have gotten that big 40-point move? And now we put our oscillators and our whatever it is we're using, and now we're ready for the next time it happens. Well, you might get it the next time, but along the way, because you've tried to put the market in a box and it's always changing, you're going to maybe put yourself out of business waiting for the outlier. We have to trade what the market offers when it offers it. Remember where resistance is. Support becomes resistance. We also have a structured trade at 9:30 Central Time called the IB continuation trade. When we take out the first hour's low at 9:30, which is there, we have a structured trade in trade alert. I'm going to show it to you. First of all, this becomes resistance, subject to your plan. And this is advanced methodology, really. These are shorts, but you have to learn these. This is now resistance, microstructure. Again, this is not part of the structured trades. This is where you develop and you understand. But this is more order flow related in alignment with other processes. I have over a 90% probability of taking this, either the IB high or low out, and over 90% probability of getting here. So for me, if I think the trend might be down, which I do, then I'm looking for continuation shorts, which is right there, to take out the stat that will be the IB. And this is my primary target. So I know I have this, and I know I can take this out first, or and if this ends up below here, I can take that out. I don't know, but I have this as a short. Or let's say I don't have it. I'm asleep. I don't know. I take out the first hour's low at 9:30. We have a structured trade. You can learn this called the IB continuation trade. Now I get to my ETH low. I have fulfilled a statistic. I have a sweep, sets up a counter rotation. My structured trade is going to be here, right here. IB. And the outside edge is this low volume node here. So what I know is if I can rotate up here and then mean revert here and fall out the bottom. I can also, once I break low, come back here for the IB continuation trade. I have a structure here for a short right here. This is advanced order flow processes in alignment with a structured trade. The structure is there and there. High volume, trigger. So your trigger is here, entry is here, entry is here, entry is here, and now you're looking to go to zero. Why not? Let's watch. So you'd be risk neutral because you got to get scaled in front of this because the buyers, this was absorption. I'm sorry, a sweep and absorption, resistance, support, short, scale, helmet. Worst that happens is you scratch the trade or it goes to zero. Look what happens here. Liquidity comes in. Any way to no? Nope. What would happen here? You'd either have a trade management process, which would be this, or you would have your stop up here and you'd scratch if it comes back inside. That's it. Watch. VPOC migration. This is saying for the full day, and by the way, I didn't talk about this. What's this? Outside edge, low volume. This is more advanced. What's resistance? This is. What happens here? Order flow. These are order flow trades. I don't want to go into them. They'll just confuse you. VPOC migration. Microstructure short, not qualified unless you're fluent in order flow. Structure, trigger, test, VPOC migration. Either we push off this way and come down here, or we reverse out and you got to run for the shelter. Watch. Too low. Squeeze. See it? So since I don't use indicators, I'm using the auction. So this is too high. That's too high. This is the new retail price. What do I need? Too high. Take this out. What happens? Too low. Squeeze. Get out of dodge. Get in the bunker. Where's my stops? Let's come back. Above here. Where were my sellers? Above here. Let's watch. Where's my resistance? Isn't it here? See? So this is kind of how you might think about this. This is a short. Now, I don't know. It's going to not go through there. I'm clueless, not ignorant. So I have a location. Now, I have a location here. Let me show you this. This is the same trade, but why doesn't it qualify? No range. I can't get in here. There's resistance. There's a sweep. There's support. If this was there, I would take that short to here because of range. Here, I get a short. The auction could care less about what I need as a trader. It just does its thing. You know, if this is too high, is this too low? Yeah, it is. Where's my next location? Here. Sweep. Too high. Where is my retail? Here. This is mean reversion. Short to there. And then where's my support? There and there. See? Resistance now is here. Resistance is here. Support is there. This is called mean reversion, underlining the term mean. Where's my support? The support is there. Sweep. Nothing. It doesn't tell me anything. I'm looking for this. Trade is managed. This is outside in. So outside in to here. Outside. So outside to there. Outside to there. All these are doable, or you don't do any of them, or you just take one and you're looking for that. You get this, and now where's the stops? Up here, above there. Now you have stops there and stops here. That's fuel. See? So, what do you do? That's your micro high volume structure. Let me draw you a little line. So what I do is I don't have to draw lines. I'm doing this for you guys. I see what happens here, and I know that my sellers are here. There's my sellers. I typically often come back and check them. So that's a short, if it's in your plan, or that's a short. Okay? So let's keep going. I think I can get in real time now, right? Notice where the support is, and now I'm coming back out the top. And where's my location, location, location? You're asking. Wasn't it up in here? Let's see what it does. Not trade recommendations, guys. Market can do anything. And remember the other part of this. It's the end of the week today, and we can get a short squeeze and profit taking. And I'm seeing aggressive buyers here. You can see it. Let me just get this. The last strong selling was here, and the buyers are now taking control. Now I have my liquidity. I have location, location. Let's see if we get mean reversion. This would be an area for me to stock a short, and it's not a trade recommendation. Right here. There's my micro high volume. Location, location, location. Remember the top of the stream, and you guys should review this. What was my plan for today? If it comes here first, I'm going to sell it. But now I have shorts in the market. So I have to be conscious that I can get squeezed more so. But if this is a trade for me, and it's just to come back here. Let's see what it does. Now, I don't call trades. You don't need to take my stops. Let's see what it does. So here's the idea. If you got short, which would be, let me show it to you. This is called structured trading. Where am I going? I would be entering here. Stop would be there. And I'm going here for scale. risk management job number one. I'm inside the initial balance. This sets up a structured trade. There's a dual element here. The IB failure is a mean reversion trade, so that's a structured trade. This is a structured trade. So I got to get under here to get the stops, and then either I'm going to find buyers here and get squeezed out, part of the joy, or the trade, which is in alignment with the trend, is looking for this. Let's see how it works. Now I'm current. Ben is asking, would VWAP to VPOC? No. Ben, VWAP to VPOC is only qualified in a trending condition, a directional move. We are crossing the VPOC, which is mean reversion. So for me, if I think maybe the trend is down, which as you guys know, I do, then I'm looking to revert to here. So if it comes out here, it could just keep going. The trend is down. So I don't know. And this is the thing with randomness. It might be the best trade of the day, but if it's not qualified, then it's not a trade at all for me, because everything works randomly, Ben. That's the problem. So the trade for me is short, where to? Here to here. Let me show you the short again. Notice the liquidity, and I get the trigger. Sellers are below the buyers. Let me mark this before I forget about it. Notice where that little micro node is. It's a little off. It's actually right there. I'm not going to move it. I don't want to take the time, but I want to show you structure. So those of you, again, that want to learn this process, you can learn it in the Trader Lab, and then this is the result of order flow. So this is location, like real estate. Remember the single? This is from the top of the stream. Remember, this is part of a plan. Now, I don't know what'll happen. I don't know anything. I'm just playing statistics. I know the probability of getting short because why? In the ETH, this was the retail price and we traded away from it. Our possibility is to check it. And if it's still too high, and this is the entry, the stop could be above here. Your job is to get risk neutral and then hang out. And either you're going to scratch the trade, which is part of trading, or it's coming here. That's as deep as this is. So let's watch. This liquidity is coming back in. Let's just watch the behavior. It's very important what happens right here. So here's what you're looking at. The sellers are here. The limit orders are sitting here. Iceberg, so they got the stops out here. And this is, chances are, it looks like it's going to scratch out. Now, what I do, if I get taken out of a trade and it sets up again, I'll put the trade back on again. But right now, no. So I'd be out, I'd scratch, and I'm going to still look out here because the sellers are here. And it doesn't mean that because we get some weak hands out, like me and you, retail traders, and I'm risk neutral, don't forget, so I scratched, that I won't put this trade right back out again if I get a trigger. Let's look. Not recommendations, guys. This is our high volume. There it is. My sellers are here. My absorption is here. If I can break below, same trade. And yes, I take stops. Nobody is immune. High volume is right there, still in the area of the location. It's still a short for me, not a recommendation. I take stops. This one would be a scratch. This one, I take a stop, then I'm done with this trade. Because don't forget, it's possible that we're going to continue squeezing. We didn't get below the low volume. So this trade would be done. If you put it on, you take a stop. If you waited on it, because this is what? This is your, right here is your support. So there'd be nothing. So right now, there's no trade. It's just okay. Now I'm going to look a little further back. Now I will tell you, if I find sellers, and right now I have buyers above my sellers, you see where the strength is? The sellers are weaker than the buyers. The buyers are still running the show here, and it's probably short covering. So there's nothing for me to do now. I have to just sit back. So I'm going to look up here, and I'm going to look at my next level, which I want to make sure I put it in here. Hold on a second. There was a level that I missed. Let me just see if I put it in. Yes, 53.66. Let me see if I put it in here. I did not. 53.66 is a level. Doesn't have to get there. Nobody cares. Me, I don't care. Market doesn't care. I put these levels on here because they're auction based. This is the distribution we fell out of yesterday, and it was separated by this low volume. I showed it at the top of the stream. So I call it a. So this is another level for me to observe. Now you notice we're getting this. So I don't have anything here. It's still what I was looking for. If I don't get the location, then that's it. Doesn't matter. If I take a stop here, I'm not going to keep chasing it. I'm not going to hit. I'm going to wait for the right location. So this is okay for me. And if I take a stop here, it's okay for me. And now the chances are still it's mean reversion. So I can now look at this, and if I get a retracement to it, to the high volume, I can consider a short if it comes back here. And then I'm looking for this. Let's just see what it does. Support, absorption, who knew? Break low, sweep, counter rotation potential, outside edge, low volume node, high volume node here. If it comes back here, I'm going to entertain the idea of a short. If it doesn't come back, it's potentially going there, and I'm going to live with it because that's the real world of trading. It's random. I have no idea whether this is the high of the rotation, that's the high of the rotation, or that's the high of the rotation. I just, no clue. So if it gets away from me, I just wait for the next bus. Now, the emotional part of me is saying is you should have sold it. You know, the lunatic who sits on your shoulder. Well, yeah, if I knew, which I can't, that this is the place to sell it, I guess I wouldn't have sold it here and taken a scale, or if I sold it here, which I really don't have a trigger, but I might have sold it here and take a stop and then not sell it here, you see? So that's just trading. It's no different than gaming. I got to turn a few things on in Investor RT. Anyway, Ben, I hope it answered your question. There's none of that VWAP to VPOC for me. It might be the trade of the century, you know? That's what we don't know about all this. It's all random. And the thing, Ben, to remember about this business is the business is one of edge. It is not, and this thing could pull back and be the trade of the century, the VWAP to VPOC. But the trend is not really up. The intermediate trend is down. And depending on the skill of a trader, and when I mean skill, I mean if we think the trend's down, in spite of the squeezes, what are you going to do about it? Are you only going to take this dominant side? That's what I do. I'm not saying it's a good plan. I'm just saying is I don't want to be buying this, selling this. I'm going to lose my mind and exhaust myself. Instead, I want to be intentional and know where my trades might show up, which is here. I mean, look where we went. We just went a couple points over the level. You know, that's part of the randomness. But I don't have a way in now. So, and where am I trying to go? Here. Mean reversion. Now, here's the thing. We will see if we get back to the mean. And what it's going to help you understand is market mechanics, not precision. That doesn't exist. But if you go, look at that, it actually got there. Then it's, can I trade this? And sometimes it's like music, and other times it's like, what's going on? Why? Random. The answer is maybe, not it will, but it might. And this is what Trader Lab is all about. Understanding the business you're trying to be in, not predicting what it'll do, understanding where it might do it, and then anticipating it. And then if you get a trigger and you know where you might go for getting risk neutral, which is here, then you'd put the trade on and you put your helmet on. If you took the trade here, you would take a stop. That's okay. Why? Casinos pay the gamblers. See? So write down, you're in the gaming business. Casinos would have figured out how to only play the hands that are certain to favor them, and they haven't. How can you? If you can't, then you have to accept what you can do. And what you can do is understand structure and understand now this is the micro retail price and this was too high. If I break away from what's too high, which is this, and I come back to the outside edge, which is here, there, I can sell it looking to go here. But my better location would be back here. Didn't get there, so maybe there's no trade for you. Because if it came out here, then it's mean reversion in a fractal. So I'm going down in time frame, if you want to think of it this way. So this is an auction. Sellers are here. Buyers were there. If I break below the buyers, this becomes resistance. So my location would be here, which is this outside edge, low volume node. And then if I go up in time frame, as you think of it, where am I trying to go? Back to this one in the next higher fractal. I hope that makes sense. You guys follow? Is this logical? And this is my location. You know, it's just, that's life in the fast lane. There's no precision, but there are market mechanics, you see? So if this would have done this from here, that's the trade. Instead, it did it from there. That's life in the fast lane, part of the random distribution. But you can, I think, get an idea of how the market works. Not that we can predict anything, but we can understand it. And then you can learn this in the Trader Lab, and then you have to deploy it, and you're going to take stops with everybody else. Welcome to trading. If you can't handle stops, then you cannot be in the business. The reason is, you show me a business where you don't pay bills. If you have questions, please post them. Also, if you're in YouTube, please give a like. Support the channel and the stream. It'll potentially show Bookmap that you guys actually find value. You always have to encourage Bookmap to continue this stream. And by the way, I get questions on, what about real-time narration? Well, I think this is real-time. But here's the thing. In the Trader Lab, there's a library of webinars, some of them up to 5 hours long of real-time narration. They were done a number of years ago, but real-time's real-time. And you can see this on display, good, bad, and the ugly, in different configurations. There's trend configurations. There's this, which is called mean reversion. We are trading inside a downtrend in the higher time frame. So for me, I'm not interested in the longs. Do I want to join the retreating side or the advancing side? Now, there's also two sides. See? So I'm only taking shorts today. Why do I want to take a long? For me, a long is covering my short. And again, it's specifically specific to me, because I'm not trading for this. I'm trading for that. This is what puts the ham on the table. You know what I mean? Rotations. So when I take stops, I'm taking, a couple point stop. When I get my location, I'm doing this mean reversion, right? This is the trade. So you're seeing the trade. You're also seeing the stops. This is real world trading. Straight oil from the can in Trader Lab. It's all random. Nobody knows. And welcome to trading. So if you can accept you can't predict or get confirmation, then you need to understand how the market works and anticipate the behavior and the locations. This is really not far off, but there's no precision. There's slop, And let's assume this is the trigger out of here. Well, it's right here. And if it doesn't come back out to this edge out in here, there's no short. And you got to deal with that because the discipline supersedes one trade. Staying in the business is more important than FOMOing in because this is the target and we all know it if you're in Trader Lab. But if you're chasing it here, your risk is out to here. So the entry is here. I hope that makes sense. So I want you to know why it's important not to be concerned about missing the trade. Be concerned about following your plan. There's thousands of trades, thousands of trades. When you create bad habits and you get rewarded, you're on your way out of business because now Hyde, the lunatic under the hood, has been reinforced. The bad behavior has been rewarded. Think about if you had a dog, and it's Pavlovian, and the dog bites or jumps up on visitors, and you don't correct the dog, and the dog gets, a pat on the head and gets put down back on the floor. The dog is being rewarded for bad behavior. So anytime somebody comes to the door, the dog jumps up on him. Simple. Well, Hyde, the lunatic, and I always say Jekyll and Hyde, by the way, high volume structure, micro, which is this. This is getting advanced. This is the IB. We have another trade in here called the IB failure. It's a mean reversion trade, by the way. And it's in the trade. It's in those 60 PDFs. This is short. Anyway, neither here nor there. And you're looking to come back here again and fall out the bottom or not. This is a bit different. The better location would be here. If you don't get it, actually, I didn't even see this. This is called the IBF. Missed it. It's a short from here to there. Now, if we come back here and we can't get back above here, we come back here and we come out the bottom. So this is the actual short. Structured trade. This is an order flow based short into the structured trade. This is a continuation short back to here, out the bottom. Structured trades. One thing I don't do well is multitask. That's why it's very hard for me to trade and stream. Because, it's like walking and chewing gum. I need 100% concentration or else I miss things. Because there's just too much stuff, Does that make sense? Are you guys with me? We doing all right here? Oh, thanks, Dan. How are we doing in YouTube? Guys, if you're finding something useful number one, please give a like. It supports the stream. Very important. There's no cost for the Trader Lab. A trader was asking me the other day, and in fact, I was thinking about it. The Trader Lab, in my opinion, is as close as you can get to a virtual trade desk. When I sat on a desk and I had other traders that work with me, I would coach them and mentor developing traders. I mean, I'm kind of like an old dog at this point, 46 years of this. But back, after I'd been in the business, I'm trying to remember, maybe 10 years, and I was a professional money manager. I had my own company, even. This goes way back into the mid 80s. I had an office. This is more than just you sat somewhere. I actually had my own business. I was out in Santa Monica, California was where my office was. And I had, let's just say, quite a swath of client base. I was a regular on financial talk shows. I'm a financial analyst, right? And all of it's homegrown, you know. And it's not important. It's back in the Stone Age. But what I learned over the years as I developed was the problems. I mean, I built systems. I was trying to solve for randomness. So I went down all these rabbit holes, and I had in the catch 22, and I want to share this with you guys. We all have winning trades. Everybody has a winning trade. Notice what we did here. This is the mean. This is the primary target of what's called mean reversion. We test it. If we don't get under it, it says maybe too low. Then what do? We can come back and return and check too high. You see? So this trade could be over, or you're going to look out here again. But here's a problem. What is today? Today's like Friday. What happens after a big move down? Potential squeeze and profit taking. It's at the top of the stream, remember? That's why you need to review yesterday's stream. This is what your homework is over the weekend. Okay. And I'll go back to the virtual trade desk idea. Your job, and where was our, let's come back. Where's our structure? Isn't it here? And here. But here, this is where the sellers dropped it. So I know the buyers got thrown under the into the Cuisinart here. What is now? This is more order flow oriented, you know. So these are not trades anybody ought to take. Where did I come? Outside edge. What ran in front of it? These guys. Now they pulled. So I don't know. And this is microstructure. I have no trade here. I just go, well, that's interesting. But I also know what is more important. I didn't get below this. So this is weak compared to this, which is higher time frame. Also, what do I know? I got stops over this swing. So we got shorts in this leg. Where's the buy stops? These guys have their stops here, here, here. Buyers here, squeeze, see the change, back here, support, support, squeeze, support. Forget it. Out of here. No longs for me. Back in the Barca Lounger. Resistance is here. Let's see. Let's see if we get a trigger. Not a recommendation. We are kind of standing in front of the wind, if you will, because the market is short and we're treating this like a Friday because this is the last trading day of the week. We're just going to watch. I have no trigger. You see what's going on here? Micro high volume is here. I'm making a new high. No, that's a high. Sorry. Let's watch the behavior. Micro support is here. Resistance is there. A little micro HVN. Liquidity is here. Buyers are active here. See them? Right there. So let's watch. I got some sellers here. And I got my buyers here. So support, resistance, location, behavior. Let's just see what it does. Not a trade recommendation. I'm going to tell you, for me personally, I can read this and it might be a rotation, but what is the more important element? I came to the mean for the whole day, the highest volume, and it's too low. If I trade in here, I'm really trying to thread a needle, and I might only come back here or only to here. I have nothing to do. I just don't trade until I get a structured trade. I don't really, this is a key area, remember? And getting below here, it will be important. So I have nothing here. I have shorts. And what do I have? Buyers, buyers, buyers. Some selling here, less selling there, more selling. Maybe the sellers are going to take over here for a counter rotation, more selling. Let's watch. Now, the thing about this is this a trade anybody ought to take, right? I don't trade. I don't have compulsion to trade. What I have is an understanding of where my locations might be and where I don't have an edge. I don't have an edge here. I'm going to always observe locations, but I'm not going to mechanically trade them. This is where my buyers are. You see, there and there. If my buyers are here and my sellers are here, and my buyers are exceeding my sellers, then it can continue higher. So this is a auction-based structure, and the buyers are still in control. See it? Hope you're getting something out of this, guys. Please give a like. The Trader Lab is a group of like-minded traders that have come together to leverage their experience. There's a lot going on in Trader Lab all the time. You're all welcome to visit Trader Lab. You can use the link in the bottom of YouTube if you're interested. There's no cost. I guess the cost is a like in YouTube. Maybe that's something. That's fair, don't you think? This is the environment. A lot going on. Charts are being posted. Conversations. Trades posted. Not trade calling, but why this? Why would you do that? You know, what's going on? This is the library of webinars. If you come to Trader Lab, and if you use that link in the bottom of YouTube, and Ned, thanks for curating this. There's 60 PDFs of the structured trades that I share and I show you at the top of the stream. You can download those, and there's a whole document section. And the contributions are just from me. It's from the group. It takes a community to do this work, to do the data mining and everything else that goes with it. Start with the primer webinar. It's a high-level overview. It's got about 32,000 views, maybe 33. I don't check. Meet the Trader Lab. You definitely want to watch this one. This is about an advanced trader process. This is advanced trader education. This is not, plug and play. The only indicator you need, you've seen enough of that, and you know what that is. And I'm going to say, we're all adults here. I don't have to tell you what it is. This is an example of the entire process, kind of like what you see me do. Start at the higher time frame. What's the plan? Why? Then the structured trades, and then the trades. And then why most retail traders using indicators fail, and then trapped in Trader Groundhog Day. Trader Groundhog Day is the random winnings that keep us trying to fix it. I just got to make it better. Look, I got these winners. I spent years on that mission because I didn't understand this has nothing to do with trying to make winning better. It has to do with knowing where to trade in a random environment and only interact when I have an edge, which means statistical probabilities. I don't have an edge here. I can't trade it. I just go, well, I don't have a trade. Is your job to play a video game, or is your job to behave like the casinos do and only play games that have a statistical edge that favor the house? That's business. We're not playing a video game. I'm not saying you can't. And you are going to have winning trades. I can assure you, if you didn't have a chart and you only had a button and you didn't know if it said buy or sell, but you pushed the button randomly, you're going to have winning trades. What does that tell you about trying to curve fit and have more winning trades with a process that might be defective? My issue for me, and it took me many years to come to the conclusion that I was trying to fix a defective process, not improve a process. You can't fix something that's defective. Consider that this weekend. And if you're interested in visiting Trader Lab, you can use the link in the bottom of YouTube. And the Trader Lab is almost like a virtual trade desk. It's almost like you're sitting with me on a trade desk like I did back in the day. And I don't call trades, but it can help you further your development. And if you're interested in that, use the link in the bottom of YouTube. That's what Trader Lab is for. Thanks for visiting Trader Lab today, guys. Don't forget to give a like on the way out. Save the link for today and the one that I posted in the YouTube chat. Watch both of them this weekend, and I think it'll give you something more than what you might have already. Thanks again, guys. Thanks so much for visiting Trader Lab. And remember, there's no stream tomorrow because of the exchange is closed. So I look forward to seeing you on Monday. Thanks again, guys. Have a super weekend, and I'll see you soon. And I look forward to meeting all of you in the Trader Lab.